kick off with you this morning. Jorge, of course, president and founder of Global Markets. Jorge, we saw oil close last week above $87, above the high of 2021. What does that tell you, and what's your outlook for this oil price now that had a bit of a run up since we crashed in late November?
Okay, what those high prices tell me is that central banks globally are going to be essentially very concerned and focused on what they do on their interest rate policy. As oil prices rise, which we have been expecting, the specter of inflation races ahead globally. The run-up we have had globally, not just in oil, but in just about any commodity you can think of, and focus on gas and power, is caused by monetary creation. And number two, very importantly, is the recovery we have seen globally in commodity consumption. Those two things are essentially still in place. The world financially and continues to grow in terms of the central bank policy. What they have is worries, what to do about it, about that pace of monetary inflation. And number two, COVID is really disappearing insofar as we know in places in the West where the population is not COVID naive, but essentially reaching herd immunity. So if you put these two things together, there is a incredible force to the upside on prices. And barring central bank intervention, prices should continue not in a straight line up, but continue to drift upwards and upwards as we go ahead, crossing the triple digit fairly soon. I was expecting that to be this month. Of course, that did not happen. But please note how the price of very key commodities like dated Brent rose above $90. And this is at a time that equity markets have collapsed, essentially, in the US. I think that's one of the big things for this week to come, is how do people feel about the equity market? Because if there is a substantial further retreat in equity markets, of course, commodities get affected.
The other big story last week, Jorge, was geopolitics, and most notably Ukraine and the issues of that. They seem to be boiling in the wrong direction, more negative than optimistic outcomes there would seem, with the British government overnight actually identifying who they expect to be the puppet president of Ukraine. Your thoughts, Jorge, looking back on the week that was, where we go with this big geopolitical fracture?
Yeah, well, in the way I see the world, I have observed big governments to create a ring of protection around them, whether it's seas or client states. And therefore, using that approach, one would think that Russia feels very strongly about the Ukraine remaining in its side. And there are various interpretations. Biden has said that Russia may act. Then there was a clarification about that. I hope there is no military action because, again, the house of cards would come collapsing, whether it's equities, but it would be very positive for oil. But nobody wants oil to go up because the rest of the world is falling
blowing up. Yes.
Exactly. And it's interesting also to observe what happened to the Navy chief in Germany, who had to resign. All he was saying is that Russia needs some respect and essentially to give them that room of protection around and for the rest of the world not to meddle too much in those former states. Of course, he lost that battle. He had to resign. And I think the world is becoming, in so many areas, increasingly polarized. Let's look a little bit further in time. If something is going to happen militarily from Russia to the Ukraine, the window of opportunity is at most 5 weeks long, maybe 6 weeks long, because the war equipment cannot move after the earth is no longer frozen. That area of the world has that particularity that you can get mired in mud. So if anything has to happen, it has to be in the height of the winter when temperatures are extremely low. Everything I have seen is a lot of posturing, but I don't see anybody shooting anything. But we need to be very alert over that window of time, which is on the long 6 weeks, but it's shorter than that. And here, where I express, I hope nothing happens. And Russia has been very clear in what it wants. What Russia is saying is, I want my ring of protection. Don't meddle with that. And I don't know if the West is listening, but I hear a lot of drums. That is very positive for the price of oil and the price of gas and the price of power, and extremely bad for Europe.
Crystal, coming back to the sort of immediate realities of fundamental supply and demand around the oil markets, we're seeing, tightness. Obviously, the global oil inventories are well below the 5-year average now, and declining. We're seeing the rig count in the US going up and shale increase. Where do you see the fundamentals at the moment and the outlook supporting this price, and as you said in your earlier comment, possibly continuing to elevate upwards?
Yeah, the big thing happening facing us is not the increase in shale rigs, because they take time to generate the production, and I hope they do, and they will. But the most immediate change is our behavior as COVID fades away. If you see what has happened over the last 3 days, and there are some countries I monitor very closely, China continues to tighten, and it reduced the amount of flights coming in from the US, and the US reduced the amount of flights going from the US to China. So China is a fortress, trying to have a policy of zero COVID. I think is very mistaken and wrong, and it will bite them. But the rest of the world is moving forward.
But just on that point, Jorge, if I might ask you, what or do you identify as the consequence of this fortress China COVID policy? Is there a notable consequence yet for the global economy, for the oil markets?
Yes, of course. One of them is inflation, or a rise in the prices of several commodities and products that China makes, because it's a cranky process to ship them out. Ships have to wait a long time to discharge. Crews have to wait a long time to enter China and load things. It is really messing up the world in terms of supplies, but it is affecting them. The question we all have is, how long can the Chinese people take it before the political pressure starts to mount internally to open up? I was in Singapore very recently, and people told me that there would be most likely a change in the Chinese policy by June. And we already see that very strong change in countries that have been leaders in how to handle COVID, and I would put the UK. In the UK, for all practical purposes, we have been kind of normal for 6 months. And in the UK, right now, anybody can fly in and fly out. And the amount of red tape that we need to face is very, very minimal. Countries like Singapore, who are former colonies of the UK and are still, even though that was a long, long time ago, still have an empathy with the UK and follow them very closely. And for all practical purposes, Singapore policies regarding travel are the UK plus 2 or 3 months. And yesterday, they announced further opening in that situation. It will be a lot easier to come in, the amount of tests that you need to take. So those are leaders in how it's changing. And Europe is considering right now to approve a recommendation of making travel extremely easy again. So the Northern Hemisphere and key parts of around the equator and south are moving forward into the right direction.
And ultimately, that is a demand recovery story that is significant for 22.
Huge. The surge we will see in the number of flights in the hospitality sector is that if you're a little fearful about the equity market, maybe you should put some money into airlines and hotels, because they will benefit no matter what is happening.
But also, where does it intersect with, we have a few things sort of coexisting at the moment. You have the Iran nuclear talks in Vienna, you've got this conflict in the Ukraine. Can OPEC Plus survive a Ukraine invasion or a Russian invasion into the Ukraine?
Yes, they can, and monetarily they would benefit enormously from it because there would be a huge pop in oil prices. But let's consider that for a minute. Are we saying that we're on the verge of a major world disaster militarily? Because this
the U.S. president has said that he expects something to happen. So let's take the guy at his word. To what extent the British government has announced, even they've identified the new president of Ukraine. It does appear that, you know, there's enough reasons there to think this is quite serious.
So if we accept that premise, and let's focus on this.
The markets don't think so, I would say. I'm just going to make that note.
If we accept the political premise of those statements, then of course go long oil and sell equities, because that spread is going to go in favor of oil. If you don't think that's going to happen, that the world is going to become peaceful, then go long equities and go long oil, because oil is going to benefit from no COVID, right? So no matter which way we look at it, oil is going to be positive relative to equities in this quarter. And let's take this number. Oil has gone up 12% since the beginning of the year, and equities have fallen, depending on the index you use, between 7 and 10%. So there has been close to a 20% recovery. If something happens in the Ukraine, that spread will widen further. If there is no war and COVID goes away, which seems to be going, that spread will widen further as well.